StarBucks stock is trading quite close to its 52-week lows, and I currently have it watch listed for $75. Now, some people have said that they don't think it's even possible for Starbucks to hit such a low price, but I'm going to tell you why I think that it both could hypothetically hit that price, not that it for sure will. It's not possible for me or anyone else really to reliably predict the bottom on any stock. And I'll also tell you why I think 75 isn't even really that cheap. I think it's probably pretty reasonable. I think Starbucks is a great company, but I don't think it's necessarily cigar butt prices at $75 either. Now, first, I'll go into why this company deserves consideration. So, they have managed to continually push up top line revenue. Growing sales is generally a positive thing. Now, there is a blip in 2020 for obvious reasons, but as you can see, after that one blip, they basically got right back on to the exact track that they were on before, if you look at the chart. Now, a business that is capable of growing its top line revenue really consistently and indicates that it has a runway to continue that growth as long as they can do so profitably and efficiently, well, that makes a compelling case to perhaps give them maybe a little bit more of a premium valuation than you might give some other companies. Now, we're going to take a quick look at how well they convert this into profit. Also, when I look at the gross margins for Starbucks, they're actually far more consistent than I would have expected. Given that coffee beans are definitely, they're a bit of a commodity and the price can fluctuate a good amount from my understanding, though I'm not necessarily a commodities expert. Now, when it comes to these gross margins being so consistent and being higher than they were 10 years ago, this leads me to believe that Starbucks has perhaps considerable pricing power, which makes sense considering how big they truly are. What I mean by that is, let's say, for example, coffee beans did go up in price and, Starbucks wasn't able to, put the twist the arm of the supplier and keep their costs down. If they need to pass it on to the consumer, well, again, because of the strength of their brand, the loyalty of their consumer, they could raise the price on one of their drinks from, for example, $7 to $7.50 in order to offset the difference in coffee bean prices and keep their margins the same without risking their customer going to, say, like McDonald's or something. So Morningstar rates their economic moat as wide. I definitely tend to agree with that. I would say they're on a probably similar trajectory as a brand like, say, McDonald's or Coca-Cola. They're already quite big, but they will probably eventually be literally everywhere. They aren't quite saturated in every single market globally yet, which bodes well for their growth for at least maybe the next few years and possibly a bit beyond that. Now, I think it's also interesting that I remember back in the day, people would say, "Hey, let's go get a coffee." Now, you actually, I think, more frequently hear people say instead of that, like, "Hey, let's go get a Starbucks." And that's just because when people think coffee, or coffee-like drinks in this case, they think Starbucks. And sure, Dutch Bros does exist, but honestly, this is sort of like saying that the existence of Burger King is part of the bear case for McDonald's, okay? McDonald's has done fine for decades, regardless of the fact that Burger King or Wendy's or whoever else exists and sells burgers in the drive-thru. Much the same way, I think Starbucks will persist and prosper, regardless of the fact that there may be other coffee companies that do a similar kind of thing the way Dutch Bros does. Analysts have price targets ranging all the way from a low of $90 to a high of $150. Starbucks, as of today, is just below $85. So, given this, doesn't it seem like it would be a layup? After all, if even if the pessimistic analyst is correct, you would get a little bit of price appreciation plus the dividend. And while it wouldn't necessarily be a crushing market beating return, it seems like the risk is rather low. So my first point of contention here is going to be the bottom line. So net income and free cash flow both appear on the data feed to have not yet gone back above their 2018 full year high. So this is interesting to me because actually one of the things that people point out when they criticize my purchase of Walgreens in 2022 is, hey, 2018 was the high. It's down from there. And okay, but you could make a similar line of reasoning onto Starbucks. Now, by no means do I think Starbucks is a recovery play or anything like that. I think 2018, if anything, may have been just a really stellar year for them. And they do have a growth plan ahead. And I gotta say, analysts expect double-digit EPS growth for the next few years for the ones that, report out that far. But where are they expecting that future growth to come from? Starbucks shareholders and earnings materials and presentations I've looked at seem to expect a lot of their future growth to come from China. If they achieve the 10%-ish growth that they're expecting in China, I think that's fabulous. I think that's great, and I think that shareholders will be very pleased in the long run if they can keep that up until the China market is saturated. However, even though I'm not a China bear and I hold a lot of Alibaba stock, I have to sit here and consider the possibility that if something did go wrong with China, I would then be double exposed. I think even when you're pricing a great business, if you're anticipating certain growth, but there is a risk to that growth, that should be a consideration when you're trying to decide what price to pay. And the exact amount you should consider it, that's not an exact science. So when I think about valuing Starbucks as a stream of income over the next couple decades, I can't help but run a few different scenarios, right? Now, I can envision a scenario where they do drive the bottom line greater than 10% over at least the short term, right? In fact, some analysts expect them to almost double this by 2028, which would be faster than a 10% CAGR on that. But I also think, what do they have to do substantially better than this? And what happens if any of the things going against them right now actually go wrong in a real way? Now, if they do manage to, for example, fight off or offset the damage caused by the unionization efforts, okay, they may very well do better than this. If things keep going well in China and there's not some kind of big geopolitical thing where China just boots out all American investors and businesses, well, yes, that growth continues, then the market will have been right to be pricing it in. But in the event we have some kind of a barista union or something just doesn't go right with the growth in China, if the Chinese economy really collapses like people say, hey, that could reduce their per capita GDP growth and reduce the disposable income they have to spend at some place like Starbucks, which is a luxury brand. It's sort of a status thing in a lot of areas to be able to afford to go to Starbucks instead of just getting a McDonald's coffee or whatever. Now, I do think that if things got so bad that China, for example, took over all publicly traded China companies kicked out the American investors, probably they would boot out and seize the assets of any American based businesses on their soil. We'd probably be approaching a hot war at that point. And I find that scenario not only exceedingly unlikely, but I think if it did happen, it almost wouldn't matter what stocks you've got at that point. It would drag the entire market down so badly. So much of our trade and so many of our companies are now intertwined in doing business in China. It would be bad. It'd be a massacre. So that's not the scenario I'm trying to avoid. It's more that some economists and, you know, talking heads out there seem to think that the Chinese economy is in a bad spot, and it could be for quite some time. And that could put a bit of a damper on some of the growth plans for both Chinese companies and American companies with a strong presence in China. Now, I, for one, personally think that China will probably continue to become more wealthy over the years, and probably the Starbucks growth there will work out, as will some of the major Chinese public companies. I am currently watching for this stock to go below $75, and I think that paying less than 75 gives me enough margin of safety that I'm getting a great business at a fair price, and that's good enough for me. Let me know down below if Starbucks is on your watch list, and if so, at what price. I'd be interested to hear your opinions on this. Also, join me on Discord, link in the description. We love to talk about stocks, just like Starbucks, every day in the Discord. Now, also, make sure that you join me every Saturday, 8 p.m., Cashflow Kings Live. Also doing a special episode tonight at 9 p.m. Eastern. Take it easy, everyone.